Hello, and welcome to myfinanceteacher.org. In this video, I want to have a look at a particular gold miner, which is Yamana Gold. A few days ago, I got this message from one of the viewers on YouTube mentioning a scary drop in the price of Yamana shares a couple of days ago. Since then, though, even in these couple of days, the price of Yamana shares has already recovered completely from that drop and is now marginally higher than it was before that scary drop. Going forward, I think as gold price approaches 1800 over the next few weeks, I think the share prices of many gold miners, including Yamana Gold, would probably do well. For the analysis of gold price itself, as well as valuation of some of the most interesting gold miners, join us at myfinanceteacher.org. All of the analysis is posted here first, and sometimes I will post some of that analysis publicly on YouTube after a significant delay once I and the members have already made a chance to take advantage of the analysis. Unlike chart analysis, this sort of valuation for a gold miner is more of a longer-term affair. So although today is 21st of May, this video might still be helpful even after a few weeks. So now let's jump into the valuation. The data that I'm going to include is, of course, gold price. We also will consider silver in our valuation, but we're going to treat silver as some sort of gold equivalent using a gold-silver ratio of 100. And for the rest of data, I'm going to use the data from the annual report for 2019 because of the troubles with mine shutdowns due to the health concerns in 2020. So for the rest of the data, I'm going to look at both reserves and resources in the ground. Of course, we're going to look at production costs. That's costs over here. We're going to subtract the long-term debts from the valuation of the company. We're going to look at this valuation per share, so we're going to look at shares outstanding as well. We're going to recognize the time value of money, how long will it take to extract the reserves out of the ground. And we'll also look at insider shares, as those are usually strong hands helping to support the price. In this valuation, I'm going to use three scenarios: conservative, balanced, and optimistic. In the conservative scenario, we're going to use a gold price of $15.29, considerably lower than the current gold price of $17.34. Even for our balanced scenario, we're going to use a price of $16.99, which is about 2% below current spot price. And only in our optimistic scenario, we're going to use the price of $18.68. And as I mentioned, since these valuation models work best over a longer period of time and can't really be used as a trading tool for a quick entry and exit, if you think that gold has a chance to go towards 18 or 1900 over the next few years, then optimistic valuation might actually have some importance in this model. So let's look at reserves and all-in sustaining costs. Looking at proven and probable reserves, for gold we have 7.8 million ounces, and for silver we have 63.8 million ounces. And actually these ounces do not include a large exploration project called Agua Rica. So actually our valuation is quite conservative, even in its balanced and optimistic scenarios, because again, we simply didn't include this exploration project, which is quite large compared to all of the remaining assets that the company has. For measured and indicated resources, which don't include the reserves, the company has 12.6 million ounces of gold and 44.6 million ounces of silver. Measured and indicated resources are not included in the conservative and balanced valuations of the model at all. So again, even the balanced one errs on the conservative side, so we really want to try to avoid buying an overvalued, overpriced stock. The measured and indicated resources are only included in optimistic valuations, and even then we only include half of those, as the resources are not as certain as compared to reserves. So out of 12.6 million ounces of measured and indicated resources, we'll only include 6.3 million ounces in our optimistic valuation. Same for silver. All-in sustaining costs are $1,012 per ounce, and as I said, we're going to look at silver as some sort of gold equivalent with a gold-silver ratio of 100. Long-term debts that the company has are $991.7 million. We're going to subtract that from the company value. and divide all of that by the number of shares outstanding, which is 951.65 million shares. And according to Yahoo Finance, there are no insider shares. Talking about the time value of money, reserves in years are 8.7 years, and we're going to use 2% as our discount rate. This would be too low if we were discounting some sort of fiat future cash flow, but we're discounting the future extracted value of actual gold in the ground, so a modest rate of only 2% is appropriate. To sum up all of that, in our conservative valuation we have the gold price of $15.29 and the rest of the data just as I've just mentioned. All of this gives us a valuation of $3.25 only, which doesn't really compare favorably with the current market price of $5.50. So in my personal portfolio, I don't actually hold Yamana at the moment. And I don't really think it's a bad company to hold. It's just that at the moment there are quite a few very interesting undervalued companies, as I mentioned to the members at myfinancesteacher.org quite recently. One of the other companies I'm quite tempted to buy with the remaining 2% of the gold-related assets is Anglo Gold Ashanti. However, coming back to Yamana, even though the conservative estimated price is quite below the current market price, remember we didn't include a very large exploration project there. So you can bump this number a little bit. Before we bump the numbers, let's have a look at our balanced scenario where we only change the gold price to $16.99. Everything else stays the same, just as in the conservative scenario. And that gives us an estimated share price of $4.62. Again, that's still quite low compared to market price, suggesting that probably the stock is overvalued. Again, however, there is a large exploration project. And if we do include half of the reserves suggested in that large exploration project, that actually adds around $3 to the balanced scenario. So although when looking at only the producing mines, it looks like the company is overvalued, in reality though, I think it's really not a bad buy. And if I wasn't already 95% allocated in my personal portfolio, I probably would throw a couple of percentage points into this company. And next, for our optimistic scenario, we have a gold price of $18.68, and we also, as I mentioned, include half of the measured and indicated resources of gold and silver. The rest of the information is the same, and that gives us an estimated share price of $10.63, which is now quite a bit better than the current market price of $5.50. And if you throw in that large exploration project at Agua Rica, that adds about $3 to the optimistic scenario, showing that if that exploration works out over the next, say, couple of years, there could be quite a good potential in this company. Now, looking at the charts, there is a very large leverage compared to gold price in Yamana Gold. Since June last year, we see that gold gained about 37%, and unlike some of the other large miners that we've looked at in the previous videos, join us at myfinancesteacher.org to see those previous videos anytime you want. Yamana actually gained over 200%, nearly 206% since June last year, whereas a lot of other large miners like Barrick and others, as far as I remember, they gained between 70 and 80%. So there is a large leverage versus gold price itself with Yamana. And looking at the daily chart, a couple of days ago we see that big scary red candle. Let's zoom in a little bit. And just as I mentioned, since then we've already recovered all of that drop and some more. And although we're already poking through the upper range of the Bollinger Bands a couple of times, we're quite far above the 50 and 100-day moving averages. RSI has been kind of moving along the overbought territory and even dipped into that territory once recently. Still, because I expect gold to gradually go up to, say, 1800 over the next few weeks, I think Yamana has a chance to maybe reach the next resistance zone, and that's near $6. That's, I think, $5.97, something like that. And that resistance zone is actually formed by the recent highs in 2016. So over the short term, over the next few weeks, I guess the potential is not amazing, around 9% or so. But in the long term, if Yamana's exploration projects work out well, I think there could be a very good potential over the next couple of years. So there's my analysis of Yamana Gold for you. And in turn, what I would like you to do is, if you like this analysis, hit that like button, subscribe to the channel if you haven't, and join us at myfinanceteacher.org, where I provide my own analysis on a range of assets, including precious metals, general stock market, cryptocurrencies, and energy. I share my personal trades immediately at the time of performing them with my own personal portfolio. And in addition to that, I have a business partner who writes newsletters about his experience of investing over a number of decades. So consider joining us. Whether you do or not, share your opinion in the comments. Make sure to have a nice day and good luck in your trades.